Hi there, traders. This is Brad Gilbert, and welcome back to trading for 2021. Now, just a quick update to kick the things off. It's obviously Monday morning here in Asia, so not a hell of a lot going on, but there's been not so much going on over the break. As you can see, I've just updated the risk on risk off page. So just having a look at the major currency pairs here, no major change. Obviously on a daily basis, the clock's just ticked over, so it's about an hour into the new day or the start of the week. And the only thing that's really moved is euro. Now, euro dropped. If I just give you a look at the charts, let me just come back and flick over here. The euro dropped pretty quickly. There was news, it was a bit of a euro sterling move. Basically, news came out that basically the UK traders could use the European trading systems for their swaps for the next 3 months. So a bit of a positive. Sterling popped on that, and euro sort of took a bit of a nosedive, but it's come straight back to almost where it was. It's and this is something that's just been kicked down the road. One of these small logistics from the EU-UK Brexit deals. But overall, let's just have a look at what's going on here at the moment. Like the dollar index still sort of cruising to the downside, but to me, it's gearing up for a potential spike to the top side. We've got some US fiscal stimulus packages due to be rolled out in the coming week. And there's a few other things, but I mean, this is no different, right? The last, I reckon, 10 or 15 years, the US dollar debt situation has always been a thing that's been kicked to the curb. They're sort of saying that, the US is going to go through a period of sustained weakness. But I tell you what, the US is the global center for the economy. So if it goes pear-shaped, everything else does as well. And the dollar usually rallies. So I'm taking that sort of view or opinion with a grain of salt. I've blown a few of these charts up like dollar Swiss. The overall trend on the dollar pairs is still down, right? But as you can sort of see, I've shrunk these up a little bit. Recent price action, obviously over the Christmas New Year period where there's a few days off, is a little bit sideways. As I said, dollar or euro was the only pair that sort of went, had that spike down. The rest of the pairs sort of still in uptrends, right? So there's no change there, but what we're waiting for now is the rollout of all the bits and pieces as far as, trying to get rid of, well, not rid of the Donald. The Donald's still putting up a bit of a fight. And there's a few weird things coming out. Obviously, his phone conversation with Georgia's head dude. And, just have a look at the news. It's not exactly like informative and directional, right? So this news here has been up for a few days. In actual fact, Metastock, I think most of the main news services haven't really kicked into gear. I would probably expect that coming into the North America session today, you'll see a bit of a major update as staff numbers come back in. It may actually be at the end of this or the next week when everything sort of comes back to normality, but it's definitely still holiday liquidity. And what that means is, there's no major, activity. Traders aren't like sort of getting excited and thinking, I'm going to be jumping all over things. There's none of that going on just at the moment. So sit tight for the moment because trading is not exactly conclusive. At this point, it's pretty much where we left off just before Christmas. The status, well, you know what? The dollar pairs are still going down. The dollar block still going up. Okay, so there's no change there. But what we're waiting for is Biden to get sort of inaugurated. That's January 20. And with that, hopefully we start to see some US stimulus packages and we start to hear from other central banks. But it's going to be an interesting year coming up, primarily because interest rates globally are obviously very close to zero. The COVID status, I've been watching this over the holiday period and all the updates as far as the fundamentals go. They've made their way onto the board and onto the fundamentals. And this is what we're sort of dealing with at the moment. It's the massive outbreak of COVID. Obviously, there's vaccines going around. Who knows where that's supposed to go? But to me, it's very clear what we need to be doing. It's just keep an eye on the dollar index. It's the one instrument, right, which does have a very clear trend. And it's got one single trend line here around 90-20 that you need to be focusing on. If that breaks, we should see a whole bunch of stop losses triggered. Ideally, if that was coinciding with the release of a stimulus package or something like that, you'd get a more consistent move. But if there's no fresh news, then it may just be another stop loss run. little pop above, and then sort of back down until we do get that conclusive driving fundamental factor. So at the moment, not much to sort of really update you about, except, the currencies are where they are. Trends haven't changed since before Christmas. The liquidity is not exactly full at this stage. So just be careful jumping straight in to kick things off. I think if anything, you might see a few short-term moves, but the real activity is going to start to take place when we get into that North American session. And that's when you can start to really look at this, not just the US futures, but the equity markets, and see what impact they're having on the major currency pairs, and trying to work out where that connection is. Risk on, risk off, strong dollar, weak dollar, et cetera, so forth. So that's where it is, guys. Welcome back anyway. And we'll start to get things online this week and get you tuned up. All right. Have a good one, and all the best for the year. Cheerio.